Welcome everybody to another segment on FinChat StartupStories. Here with me today is the two co-founders of a nice investment platform, Franc.app. So it's Thomas and Seb joining me today. Tom is actually joining me from Shanghai, which is quite exciting, working remotely. And so I really like what these two oaks were doing. So they started their business, I assume what they sent me is they saw that in South Africa, there's a massive shortage of saving and investing. And they found that South Africa is actually the leading search of how to invest, and that only 4% of people actually invest in South Africa. So they took that shortage and problem, and they started a new business which they called Franc, and this is an authorized financial advisor and help users understand how much investment risk is right for them, and then help them in a fun way and simple way to actually invest. Seb, is that the right way to describe it?
Yeah, 100%. I mean, I think you've got the problem that we're trying to solve there. I mean, yeah, like I said, we estimate that 4 or 5% of South Africans have discretionary investments outside of like their retirement plans, and a lot of people are saving but not investing. So money in a tin can, money in a savings account, not earning any sort of return. And that's the problem we're trying to solve, like to get them some return on their money, so that they can try and keep up with inflation at least.
Yeah, and I see you guys are also mentioning like stokvels and stuff in your marketing campaigns. I don't know exactly how stokvels work, but I think it's like in the communities in South Africa, they put like money together, and then one person that's part of the stokvel gets that money for that month. Is that one of your prerogatives or plans to actually get that money into Franc for them to actually get a return on that money better, or what was that around the stokvels?
So maybe I can take that. So I mean, at a fundamental level, I completely agree. We do want to see people that are currently saving in a stokvel invest, and that's fundamentally because predominantly stokvel savers or stokvel members are putting their money, in the best case with a bank in a group savings account, where they're lucky if they get 0.5% interest on that money saved, which means in real terms they're actually losing the value of their money over time, and this really isn't a segment of the market that should have to lose their savings.
Yeah.
So at a fundamental level, we want to see stokvel members across the country invest, and at the very least put that into a no-risk investment, like a money market fund that we offer. But on a more kind of innovative way, as you may know, a lot of the major investment products in South Africa actually have very high minimums. And that's a challenge for many people. So, for example, to open a Alangay money market fund, you need 20,000 Rand as an opening account balance. And a lot of people just don't have that money lying around.
Yeah.
So the way in which we facilitated access is effectively through a stokvel mechanism. So a stokvel is really any group of people that have a common purpose, have a common bond, and in this case, that is investing.
Yeah.
We as a company effectively have an arm's length relationship with that stokvel, and we help them get access. But in actual fact, we don't control their money. We provide a service in terms of investment advice, and we help that community access Alangay money market on the one hand and Satrix 40 on the other. So it also plays an operational solution for us to help people get access.
Yeah, and I downloaded the app like 2 days ago. I've just been playing with it, around with it a bit, seeing how it works. And I really think you guys have been doing a great job in actually keeping it as simple as possible. Even if before you sign up or put your details, and you can actually do, I can do like the risk assessment directly.
Yeah, you don't need to provide us with any details. So there is like room to sort of play around and explore the app before you commit to like giving us your details.
Yeah, and that's what I really think is great. I think that's what's the most unique thing about Franc is that you can actually, through the risk assessment, and I assume that's where you get in, say, because I think you're an actuary, right? So that's where you do like a risk assessment, and then from that you provide like or your portfolio should be balanced from like between the equity and the cash.
Correct. Yeah, I won't take credit for the risk assessment. One of my colleagues compiled it, but okay. Yes, I mean, you're 100% right. So, I mean, that's the sort of filter. We ask you questions, as simply as possible. Age, income, expenses, savings, debt, etc. And from the answers that you give us, we'll sort of profile you in a certain way just to see what your risk carrying capacity is, and also your horizon. Because if you tell us your savings horizon is less than 3 years, then we'll push you 100% into the cash product, because there's not enough time for you to ride out the sort of volatility of the stock market. But if you're going to invest for longer than 3 years, then we'll take the answer to the risk assessment and say, okay, this is how we suggest you should be investing your cash. But at the end of the day, it's up to the investor to decide how they want to invest their money. We can only suggest to them what we think is appropriate and what someone in their position should be investing in, but at the end of the day, it's their prerogative.
Oh, that's fantastic. Okay, so let's go down to the beginning. Where did the idea start for Franc? What was like the spark that got you thinking together to like let's do this thing?
Yeah, so I think it's really interesting. When you bring kind of people together from different backgrounds that have both been independently thinking of the same problem. I think that's fundamentally how and why Seb and I got together for different reasons. Seb, I'll leave you to explain your own, but from a personal perspective, coming as an engineer into the financial world, I did my PhD in kind of machine learning, was a researcher and academic for many years, and then came back to South Africa and started working at Discovery. And I was working in their product development team, so I was surrounded by actuaries, and I was, arguably in the belly of the beast when it comes to developing financial services. And I just saw complexity. I saw, products that were inaccessible because they were, pitched purposefully at a very complex level, which necessitated a broker to be able to explain the product to you. And particularly when it came to investing, and obviously this was the first time I started earning a proper salary without being an academic, that I wanted to know what to do with my money, and I could never get a straight answer about what the fees were, what was good, simple investment advice. I was kept on I was being sold products with high fees, basically, don't trust us, basically give us your money, you shouldn't worry about it. And then the moment I started putting that into a model and actually looking at how much fees I would pay over time, it blew me away. So I saw a gap in the market where there wasn't a place where I could download an app, make a simple decision, and start investing. So it was very much a learned personal experience about what frustrated me. Seb, do you maybe want to tell your story?
Yeah, sure. So mine is slightly different. So I've been involved, after I left last year, I've been involved in financial services for 15 years, either in banking or investments. And I'm focused on investment.
What banks did you ever work?
Nedbank. So I was in the corporate finance team. And then I left to join a company called Brimstone, where I was there for 8 years. So I've always been involved in finance and investments, and in my sort of actuarial qualification, I focused on investments. So that sort of has been my passion for a long time, and I've started investing personally sort of like in my early 20s. So got experience there, and I realized that lots of people who don't understand these products, they just end up not doing anything. And I could see like my friends and family that were not sort of financially savvy, they often came to me for advice saying, what should I do here? What should I do there? Not, it's just because they're either intimidated by the products that are out there. They don't want to go to a financial advisor, bearing themselves there, or,
and paying them massive management fees.
Yeah, correct. So I could see like my sort of own sort of anecdotal experience that there was a gap in the market for this. So when Tom spoke to me and said like, this is what we're doing now, it made a hell of a lot of sense.
Yeah, no, I definitely, I think what you guys are saying is exactly what when I see Franc, it's the simplicity, and also your fees are like 1%, I think, of the invested amount, yearly, obviously, which I think is fantastic. And okay, the product wouldn't necessarily relate to someone like myself, because I'm in finance. I've studied finance. I've been investing forever, so I spend time doing research on how I invest, and obviously can take a lot more risk in that way, calculated risk, if I can call it that. But that's what I like about Franc is like you almost like you play, mostly the biggest value add is the role you play in the taking up the gap for like the financial planner, and just being straightforward, saying, listen, these are just some questions that you have to answer. Then we propose something to you. Maybe this is what would be best for you based on our experience, which is automated completely, and indirectly it goes into it.
Yeah, I mean, I think that's right. I think, there probably is still a role for financial advisors for those with, big portfolios. But the problem that we're trying to solve is to try and get people that have never invested before to start investing, and to be that sort of easy transition.
That first
and
step.
Like where they've kept money in the bank previously, say, listen, your money's not doing anything in your bank account. Join us, you'll get 5%. Or if you've got a longer term horizon, this is what the stock market is about. We've got an index tracker fund that you can get access to. If you're investing for 5 years plus, it's a good place to park your money. You'll get good returns if sort of history repeats itself. So it's like to get those people that are on the sort of verge and want to invest, like to be their first step, and we think that market is a very big market in South Africa.
Yeah, and I mean, just that first step to quicken that thing. I think one of your questions also is like, what's your age? And if you have like an 18-year-old that goes on there, and like 50% of their savings on Franc is like in your Satrix ETF, the top 40, and they see like that's outperforming quite well. So now, and that could just quicken them to do some more research and go into that. But I think what's quite fantastic is how you creating risk profiles for each of your users and then matching that to a portfolio. Are you guys in the future like thinking of changing up the equity sides, or changing up the portfolio outsets, doing the risk assessment, making that very clever, and then matching that to like a portfolio that you set up, matching the risk profiles of those to the individual and the portfolio?
Yeah, sure. I mean, I think at the moment, at a fundamental level, we are doing that, right? So our recommendation is actually mapping an individual's risk carrying capacity and the timeline of their investments to a volatility weighting. And we're actually measuring that volatility currently, obviously, using the two funds that we've got. So obviously, the cash product doesn't have much volatility at all. Obviously, in the last few months, we've seen a drop in the interest rate, but for many, many years, it was very, very stable. And the equity market, obviously, is very different.
Yeah.
So we are doing that marriage between where you are as an individual and mapping that to a risk portfolio which is right for you.
Yeah.
So obviously, there's some sensitivity within that band, even though it's just a slider between 0 and 100%. We can place you on that curve at exactly the right point for you based on your sort of time horizon. Obviously, there's far more complexity. You can add other funds that are going to have other volatilities, different asset classes, but we thought we'd start off simply and then look to expand into an offshore index tracker, for example, possibly look at other asset classes that might be beneficial. But as a starting point, we're happy.
Yeah, no, I 100% understand. I think there's so many things that you can do with this, and it's super exciting. I'm really actually excited to see how it rolls out in the next 5 years, especially where we can say like there are a couple of discounts on, or the market is a bit discounted. We're going to rebuild South Africa now. I think we're in a difficult space, but I think saving is becoming more important. People realizing that. And I'm really excited to see what happens with Franc in the next 5 years. But let's get back to your your entrepreneurial journey. So you got the idea. What were the first steps that you took to actually get the ball rolling, Tom?
Sure. So I think, I've had some entrepreneurial ambitions in my previous life as an academic. So I wasn't a very good academic. So I spent a lot of time trying to think about how I could move out of academia. But it was all in the health tech space. And I think that the biggest lesson that I learned from two prior ventures, one in South Africa and the other one when I was over at MIT, was to actually build it. America is obviously a slightly different ecosystem where you can raise capital simply by an idea, a strong team. And
do they give money to literally someone just giving a pitch of an idea?
Yeah.
Yes.
But interestingly, in the space that I was working in the sort of consumer health space, which is with a strong focus on preventative medicine, the honest reality, the honest answer is that actually nobody makes money out of being healthy. Yeah. Which was a tough lesson to learn, but also meant that, don't try swim against the current.
Yeah.
So that's why when I decided at a certain point in time, obviously finance and particularly in helping people make smart financial decisions, I think everybody has a basic desire to be wealthy, to provide for their family. So there's more innate drivers that you can capitalize on, providing a good service that they can access and they can use. And then the second was actually just building the app. Instead of trying to waste time and energy convincing other people of what I wanted to do.
Yeah.
So I'm not a great programmer, but I was able to build the first version of the app, which was enough to get some users. It was enough to attract some attention. So that was, I think, the primary lessons I learned. Build it and don't try to swim against a riptide.
So then you built this thing yourself, and you said after you built it, you started getting some attention. What was that first attention that you started getting, and like how long was it between like the idea and you started building it and then you started getting the attention?
So I'd say it was about a year in the build, and the building, this was taking place in kind of evenings, mornings, and weekends before and after work at Discovery, which is quite tough. Then I left at the end of April, so I started working full-time in May 2018. I was able to launch to kind of friends and family in July of 2018. So that was, a few months I was able to get an app into the app stores. We won Seedstar South Africa in, I think it was October 2018. That was some good positive publicity. But super early stage. The app was buggy. It wasn't very pretty, but it was enough to start. Basically, I think the next key thing was building the team. So our first employees came on board in March last year, a designer and a full-time developer. And then we were really able to kind of overhaul the app. And then in September last year, we kind of moved out of our early launch phase. So we sort of did a public launch. And then I'd say that, what do you think? The first real kind of notice was maybe MTN winning the app?
Yeah, so lucky for us, I mean, we launched in September, and, we were able to sort of showcase that product in the MTN competition. And that, I think that was like a week or two after we had actually launched, and the awards were in October. So yeah, we managed to win Best South African Solution at the MTN App of the Year Awards. And there you're competing with lots of other companies, including big companies like Discovery was one of the competitors in one of the categories, just to give you an example. And we won that category and got a lot of good sort of press and PR around that, so gave us a nice spike in terms of user interest and registrations and stuff. Funnily enough, COVID over the last couple of months has given us another big boost. Like you said earlier, people now know that they need to start saving for the rainy day, even though the rainy day has come. So a lot of people are a bit late, but that and the fact that a lot of people are at home, got more time to spend on their phones, forced
seeing some
to
things,
transact. So that's sort of the latest sort of kick that we received.
Yeah, and I mean that's what I've been seeing in South Africa. There's like it's difficult to actually start a business in the tech space where you start a business and you have to build something to actually get funding for that. Like Thomas said, in South Africa you don't just get money for an idea, which would be actually so great. But to get actually the ball rolling, the main thing to almost go after are the competitions, to win the competitions, to get the publicity of the competitions, even just the people that attend the competitions and see what you are doing, or seeing the progress that you're making, and so on. But you guys are going into a competition next week also with the Google Accelerator, right?
Yeah, it's not so much a competition. It's more sort of like a program where they, sort of help you with certain things like your technology, get you access to mentors, help you with whatever challenges you're having in your business. So yeah, you're not competing against anyone really. So I guess the competition aspect came in before this, where you apply and you hope to get accepted.
Okay.
We were lucky enough to be one of only 2 South African companies to be chosen in this sort of cohort. But yeah, for now it's sort of like a group collaborative where everyone's trying to learn from each other and from the mentors.
Oh, so it's more like just a course to get better at what you're doing.
Correct.
Yeah. So Seb, how did you actually join then, Thomas, when you launched that thing, you started getting attention? How did you guys link up?
Okay, yeah. So I guess we didn't give you this background. So Tom and I went to varsity together. So we were at UCT together. So known each other 20 years, and we stayed together in the same residence at UCT. So friends from then, and I had sort of kept an eye on what he was doing with Franc. And then when he chatted to me sort of early last year, he said, because the initial idea with Franc was like around an insurance type platform with savings as sort of an added element. And he said, no, he realizes that I think savings as a primary objective or primary product is the way to go. And given my experience, which I explained earlier around like friends and family requiring advice and not knowing what to do, it sort of like resonates with a lot, made a lot of sense. Yeah. So then I decided to join it.
I mean, one thing to add, but I think this is like so important in terms of any advice I'd give is, find people that complement you, and I think Seb and I have a good dynamic. We have complementary skills, and that's so important, right? Because you're doing something that is pushing you into new territory all the time. It's nice to be able to bounce ideas off the other person. So it's great to be able to have that and be able to leverage on the skills of the other person. So it really is the sum of the parts is greater than the whole.
Yeah, definitely. And so how did you fund this thing then to actually get the ball rolling? Did you just put your own money in from savings that you did yourself, or did you get some seed funding, or did you use the competition money? How did you get this ball rolling?
Yeah. So let me chime in there, Seb, at least in the beginning, because I learned some hard lessons as well. So after we won the Seed Stars, there was some strong investor interest, but naively I was thinking it was going to be easier than it was going to be easy. So I wanted to kind of get all the investors to come on board at the same time, and there was a small group that kind of were keen.
Was Sebastian part of the team then? Was Sebastian, did he join you by that time yet, or were you still by yourself?
No, unfortunately not. I think Seb would have given me very, very strong advice.
Yeah, that's what I think with a corporate finance.
Yeah. So, and I think after our lead investor, they had some challenges with one of their portfolio companies offshore. And obviously, the moment the lead investor had issues, all of the other smaller investors didn't feel comfortable to come on board.
Yeah.
So that was a big challenge. And that came out of the blue in February of 2018. And that was, as I mentioned, just before we started hiring people. So by that time, there was enough of a team that we were able to kind of bootstrap. Yeah. So within the team, we were able to raise, what is the total in the end? About 1.2, 1.5 million?
Yeah, ended up being 1.5. Yeah.
Did everyone just put stuff into a pot, or did everyone also have savings to keep up their own living, getting food to eat and having a place to stay, or how did that work?
So it was a mixed bag, but I think people were able to put in some savings that they had. It did mean obviously that some people, had to go back to work. So for example, our CTO, could have come on full time at that stage, but he obviously didn't then have that sort of buffer to support himself. So he took a job at Amazon as an engineer there. So it was tricky, but I think as a team it was great that at least guys now were willing to contribute to the idea. And what we had done is we created an ecosystem which effectively rewarded any contribution put into the business with equity. So a form of equity. So that measured not only the cash that you put in, but the time that you put in, any relationships, investor introductions that you made, etc. So we quantified effectively this entire ecosystem. It's not novel. I mean, it's a great idea, but it's borrowing from what's been pioneered now in the States, something called slicing pie. And it's effectively rewards contributions with slices. And then obviously the equity in the business at a certain point in time, you bake the pie, to extend the analogy. Okay. And that's when you kind of issue shares proportionally to everybody's contribution. Yeah.
Yeah, because as a startup, as a startup, you have to keep as lean as possible, right? So, we have a few employees that are salaried, but there are a lot of people that give off their time to the business, and are getting equity sort of for that, So
and they obviously have savings to keep them up.
Correct. I mean, Tom and I haven't smelt a salary, in a very long time, and it'll probably be that way, for a while still. But that's how you have to, run these types of businesses. If you try to pay yourself market-related salary, it's not going to go anywhere. And I think, investors want to see that you're committed, that not only are you putting money into the business, but you're also putting the sweat equity in, that you sort of, putting skin in the game. Yeah.
And you guys are working remote. Do you have offices?
Okay. So, the team is split roughly, obviously Tom is in Shanghai, but roughly between Joburg and Cape Town, almost 50-50. The Cape Town staff members typically all work from home. But in Johannesburg, we do have office space at Alpha Code, which is a fintech incubator that RMI has sponsored. So, we do have office space when we need it. But again, a lot of our guys prefer just to work from home. So, we have an office day. Right? Yeah, 100%. And, we had an office day on a Monday where we'd get together and just bounce a few things off each other and just make sure, the company gets together once in a while. But since COVID, the last 3 months, everyone's just been working remotely. And for us, the systems that we're using, et cetera, it's been a seamless transition for us. It's almost a business as usual.
No, I can think. Definitely going to the remote working. But Thomas, if you could go back with a mix-up you had with the investors, if you could do that again, maybe Seb, you can even jump in here what you would have done. Maybe, Tom, what would you have done differently?
I think the moment money is on the table, take it. It wouldn't have changed the subsequent investors, if anything. They probably would have been, now that they saw money was actually committed. I think at a naive sense, I thought that you needed to, in order to keep the terms of that transaction consistent, you effectively, which is how it happens at a Series A and Series B round. Obviously, you agree on the terms for a group of investors, and then those terms are shared, and you sign that transaction. That's how it takes place. But in a pre-Series A world, and you're dealing with these small bits of money through at a seed stage.
Yeah, everyone giving
at a fundamental level, the terms of the agreement is not changing that much. So it allows you to effectively, take one transaction, and then even if another investor comes on board, a month later, you can still offer the same terms. And obviously, the agreements that we have in place now with investors is that if ever there are better terms that come down the line, the better terms effectively cascade down to all of the investors who signed prior to that point. So it gives them some protection as well to say okay, I may have been the first or second investor, but if the same instrument is used to raise money, then I'm going to benefit from any improved terms that come down the line.
Yeah, makes sense. And I'd say, do you agree with him? It's like the best way to do it.
Yeah, 100%. I mean, I think, when I joined TomTom, these guys are in, and with my sort of experience, knowing that lots of things can happen, in deals, lots of things. It's more likely a deal is going to go wrong than everything's going to go smoothly, So I'm always sort of like a pessimist when it comes to that kind of stuff. But yeah, I mean, I agree with Tom. Like, if you've got a deal on the table and the guy is willing to pull the trigger, as long as it's a fair deal for you and them, like, take the money,
So you would say always take the money?
Well, not always take the money. I mean, we were in a fundraising stage at that time, so we were looking for funds. But yeah, I mean, just as an added sort of observation onto that, it's always easier to get money when you don't need it. When you need the money, there's no one there. When you don't need the money, you've got people flocking to you, saying, take my money. So yeah, it's a strange one, but yeah, if it's a fair deal for you and the investor, and you're in a fundraising round, don't wait for something that's marginally better. Rather take the cash, because
that makes sense.
For us, we were lucky. We started getting external investors on board in December. We got a few more, December last year. We got a few more on like February and early March, just before COVID. If we didn't get that money on, we would have been in big trouble, because no one's really looking at funding new ventures. Everyone's looking at their existing portfolio. So yeah. So for us, we were lucky that we got money in just before COVID, and I think a lot of other businesses are not as lucky.
Yeah, no, that makes sense. And I guess going forward, like, what was then your first steps when you thought, okay, we got some money in, or we got a team together? What were like the first steps that you thought, okay, these were the things that we have to do first? We have to get the app on the market, or we had to get this relationship, or what was like the key steps? How did you actually approach that? Did you set up like a to-do list? What was your process in actually building the thing to what it is today, or where you got to today?
Yeah, I mean, I think on some level, it's always a work in progress, right? So you're always learning, you're always improving, at least from our side. And so much so that even today, we had a big discussion with the team about how we can optimize our product development process. So it's constantly something in evolution. In the beginning, it was very much around, what we had in concept. So this idea of kind of making investing as easy as possible. So it's all about how you can do that. I think the challenge then becomes, okay, the priority between, or the trade-off between optimizing what you can fix and delivering on new products. So that's a stage that we currently find ourselves. So I think it's interesting in that we know that the onboarding process can be improved. And so we're currently working on doing that. And the only reason we know that, obviously, is because we have people using it now, and we know where they're dropping off. We know those friction points are.
Yeah, I actually think you guys are doing great in that, because in my experience, when I go into an app, I don't like signing in before I do anything on it. I want to see how it works. I mean, when you go into an app, the first thing you have to do is like create accounts, and it takes time, specifically also in like fintech, when you have all the FICA stuff that you have to do. You actually give service even before you actually sign up, which I think is absolutely fantastic.
Thanks. Yeah. And I think, having that data and knowing that we need it to optimize is one thing, but then obviously you have an ambition for new products and new features, which is pressing. So it's a constant question of like making sure you divide your time between optimizing a little bit and working on the new stuff, and making sure that you keep on delivering new features that people like and want. Because as we now are building relationships with our clients, we have a lot of people coming in with suggestions. We call our users and say, what do you like? What do you don't like? What do you wish we could offer you?
Yeah.
And we're getting very valuable feedback. And we obviously want to satisfy people's needs. And, there's a lot of alignment between, what people want, for example, trying to help their children develop a good investment practice, if you will. And there's nothing really on the market that can help parents do that, or even grandparents do that with their grandkids. So, yeah, not to let the cat out of the bag, but there's a lot of opportunity for doing new stuff.
Is there like a way where, like, say our grandma, I'm just thinking about an idea, if like, say our grandma wants to help their, or like do some saving with their grandkids to buy them like a voucher of like say not 200 Rand that they can just save on Franc?
Yeah, so at the moment, you can save as an individual only, but Tom is talking about like additional functionality that we hope to release soon, where groups can save together. So whether that's family, friends, and that goes back to that initial Stockdale discussion that we had.
Yeah, giving
how
like
we're trying to get them on the platform.
And making license
Yeah,
social, when like someone makes someone sets a goal to save up money to buy, so now the PlayStation 5 came out, now they want to buy the PlayStation 5 next year, and they're saving up, and everyone sees, okay, no, it's working for him, and everyone gives kudos. That might actually like encourage them to even build that up. So I absolutely love that social saving, group saving thing. That's quite cool. So what actually excites you guys? But let me first ask this question. So in this, obviously you guys have a dynamic between the two of you. I assume one of you are like more of a dreamer and one of you is more like a realist. Which one of you is more like the dreamer?
I'll probably accuse myself of that. Yeah, which is, it's like a blessing. I mean, I think more often than not, I think it's actually a challenge, because one of the things I'm realizing in an early stage company is you need such razor focus.
Yeah.
And the problem is if you're looking to the clouds and you're looking and thinking about all the wonderful things you could do, your eye is not focused on what you need to do, which is like the next step in front of you, which is obviously the first step towards those dreams. But you need to take 1,000 steps in order to get there.
Yeah, and just say, bold you back on that. It's like, whoa, Thomas, you have to calm down. Let's first focus on this. So
the other day, Tom, that was a good description. He said he's the kite, and I'm the one like pulling him back. Yeah. So I think it's a good description. But as Tom said, you can't have a team of all dreamers.
People that take up too much ideas. So let's get what excites you the most going forward with Franc. Like, what is something that you actually want to see in, say, let's say 2 years' time? What excites you in the fintech space, and also like what you guys are doing? Thomas, what do you really want to see in like 2 years' time?
Yeah, it's a wonderful question, and I appreciate the opportunity of answering it. I think something for me, which is a very personal thing, and I'd like to obviously help Franc users along this journey as well, is, I came from a family where it didn't make good financial decisions at all. And, I see many, many South Africans not making good financial decisions. So I think a big ambition for me, at least, is for Franc to play a role in helping people think differently about money. Obviously, the starting point is around creating wealth, feeling confident that you can achieve your financial goals, building up, even if it is building up some sort of credit worthiness, now that where previously behavior was, kept in a ledger book and in a tin can in terms of savings behavior, bringing that into kind of a more formalized economy and recognizing good behavior and encouraging good behavior, making people feel confident about managing their money and their finances. So I think I'd like to help people along that journey. And then obviously going forward, I don't think investing is the only challenge that people have when it comes to managing money. They're thinking about insurance. They're thinking about credit, how to use debt wisely. So I think there's a lot of scope. And I think always our role will hopefully be in that facilitating role and that ease of access. So helping people make good decisions, make smart decisions, and then giving them access to really good value products along the way.
Yeah, I mean, we recently with FinChat on one of our other podcast channels, Randy, one of our co-founders, also did a series on credit with a credit analyst from RMB, where they spoke about good credit and bad credit and like how important it is to know how to use your money. So I think that's actually spot on for what we need in South Africa. But Seb, what is something that you want to see in 2 years' time with Franc? What's like your goal that you see you guys reaching?
Yeah, so as a new sort of financial services brand, people are a bit skeptical. Anything where you need to like transfer cash to a newish type entity, there hasn't been that level of trust that needs to be built. And hopefully in the next year or two, we can build that trust between us and the consumer, whether that's through brand awareness or word of mouth, people saying, look at these guys, I used them, they were great service, great product, was easy, just to build that brand, a bit more. Yeah. And it'll take time because, we don't have the name of an Old Mutual or Sanlam or whoever has been in the game for a long time. But then again, they may not be, giving their clients the best service, So yeah, it's like to try and be more sort of get the brand out there and to be trusted,
And who's your actual market that you're going after? Are you going after like the poorer communities, the people who would utilize a stokvel, or obviously everyone can use it, but who's like your primary group of people that you want to reach to use Franc?
So I think our starting point is actually focusing on people that are kind of new entrants into the market. They're younger, they're probably between about 20 and 35. They've got their first job, they're kind of earning some spare cash, they're wanting to invest, they're wanting to kind of access investments that they don't know how to access or they can't access because of the minimum barriers put in place. And they're definitely very comfortable using their phone for mobile banking and everything like that. So where I think we want to start is for that new investor who doesn't have the same trust issues as maybe, somebody who's living in a rural area, who's maybe been exploited as part of a Ponzi scheme in the past, who withdraws all of her money out of the bank the moment she gets paid. I think it'll take a longer time to get the trust of that user. Whereas, going after the younger, more tech savvy, wants to invest, comfortable using their phone, like that's our sweet spot.
Yeah, going after those people who actually are deciding now on how will I save from their first paycheck, like onboarding onto their first saving thing. What I also think is cool is what you said. I think it was Nano who said something about this, but the other day I was like checking on Instagram and I saw this one guy's bio. He just said like investor at Easy Equities, which I thought was like, I think that's so cool when people take pride in, yes, I'm managing my money. And you mentioned that. And I think if you create that pride for the young professionals and people going to the market, I think it's actually fantastic.
And just on that point, and I think it's worth mentioning this, in many ways we see ourselves and Easy Equities sitting side by side. We acknowledge that there are people in the market, and I'm sure you're one of them, who are very happy to manage your own portfolio. But we think that there's obviously many people that don't feel comfortable managing their own portfolio. And so that's where we want to help, those investors access the market. So we definitely see ourselves side by side, and we have a working relationship with them at the moment, which I think is positive, and I'd like to see more digital investment platforms, create kind of wealth and value for consumers.
Yeah, I just got an idea which I think would be quite cool. So now myself, I studied accounting. I'm in the investment space. Even like Sebastian, who worked in corporate finance, he knows how finance works. So now he can set up a portfolio somewhere, and like someone else who doesn't have that experience at all, you can set up a risk profile of, say, on my portfolio, and say on my brother who doesn't know anything about investing. You can do a risk assessment. You can set up a risk profile for him, like what he needs, and you can match it to someone like myself who's doing that. So you can piggyback on someone. I think there's like a trading company, there's some trading company that does that, where one person trades and someone can just follow their trades. It all just happens. I just think it can be cool, because obviously when I invest something, and people trust me to do it, and they have actually the same risk appetite, and you can quantify my risk appetite and my risk profile. I can just think it can be cool to do that group investing thing also through that.
I mean, it is something that we've thought about, and like something on the horizon, like sort of like peer type mirror investing. It's something like a company called Public is doing in the States. So they're like a Easy Equities Robinhood type equivalent, but they've got like some portfolios there of celebrities, of like investment professionals that you can see, okay, this is what these guys are investing in, and you can copy it. It's maybe less relevant now for us, given that we've only got 2 products, so it's not a lot
no, definitely
portfolio difference. But yeah, it is something that goes into our risk profiling can go into our risk profiling to say, 35-year-old male from Johannesburg, this is what other people are investing in. Their split is 80-20 or that kind of stuff. Yeah. So that is something that
people can give like ratings, and they can have a history and stuff. I think it's quite cool because I think one of the big things that we're seeing with like the pension funds and people, especially like the old people, are unhappy with what happened with their pension funds and lost things in like Ponzi schemes, like you said earlier. The problem is the people who invest stuff there, they don't have skin in the game, if I can call it that. Like they just invested because there's this thing about not being emotional, which is true. But because they're not actually personally invested in it, they take too much risks, and they obviously put people's money at risk. Where if you put like if someone can track or piggyback on someone else's trades or someone else's investments, I think it can be quite beneficial to have like smaller, let's call it fund shops, where a person is a fund manager themselves of a couple of individuals. But cool, let's go into our speed round. Just some questions that we'll ask every single guest. What was the top 3 challenges starting a business and getting it to where it is today?
I think challenge number 1 is capital. I think it cannot be denied. South Africa, it's a tough ecosystem for early stage businesses. So that is always going to be a challenge. I think the second is, I think we lagging behind some of the precedents which has been established in America when it comes to agreements that allow for early stage businesses to get off the ground. So think of it as an ecosystem, a legal ecosystem that's a little bit more flexible to allow an early stage company to come off. I think a lot of South Africa's industry has very much been
overregulated,
skewed with corporate so it's almost over-regulated, which it can be a bit of a hindrance for an early stage business. Like you want things to be a little bit easy, just because you don't have the money to pay big lawyer fees and that kind of thing.
Yeah.
And then I think the last thing that I think we've been quite good at it is building a team. So that means like finding people that want to take a risk, want to take a haircut on their salary, but also a challenge around motivating them, incentivizing them in the right way, so that you're being fair to them, but you're also managing your own kind of risk about building a business. So those would be my 3.
Oh, fantastic! And Seb, if you would start this whole thing, the whole process over of joining, at the time you joined, and everything you've done, is there anything that you would have done differently, or think like in hindsight you'd think, yes, I think we could have done that a lot quicker or whatever? Is there anything like that?
Yeah, I mean, generally, I think, the path was fine. Funding was more difficult than we imagined, but I mean, that's just what happened. There's nothing that we could have really done. We didn't really turn any investors away that would have invested, I don't think. I would say the only thing we could have maybe done better is like release new versions of the app, new functionality a bit quicker. I think that's just more on sort of the product side. Yeah.
And so let's talk a bit about your failures. How many times have you failed? Like, what are some of the biggest failures that you've had, and now you've learned from some of those, Thomas?
Yeah, I mean, I think the big lesson for me was the funding issue, the funding lesson that I mentioned earlier. I think it's also, we had a couple of, or not a couple, like a single experience with somebody who wasn't a right fit for the business. So I think, in many ways, getting into an early stage company is kind of like dating. You really take on a lot, and you can also get yourself burned by getting involved too quickly with somebody that you don't really know. So I think those are kind of two major lessons. And I think all of the other lessons we've learned, I think largely we've been able to correct. So, with the product management process, for example, and optimizing that just to make sure we're doing our product development as efficiently as possible. yeah, we realize it's not working. We put our heads to think about how to solve it. We come up with a better solution and we give it another crack. So it really is a process of continuous learning.
Yeah, and Sebastian, is like how patient you have to be with things happening. Like obviously building a business from scratch, it takes time. Coming from a corporate finance background, obviously that's a quite lucrative career choice, and coming where you have to be patient now, building something from scratch. What has been the hardest struggle with that patience in your personal life, even building the business?
I mean, you do have to be patient, but I think I think there's something that you need to be before you join. If you don't have it, then it's pointless joining a startup. If you think you're going to get results in 3 months or 6 months, I think when I joined, Tom said, "Listen, it's going to probably take us 2 years to get this thing going properly. You're probably not going to see any salary for 2 years. So you have to have the right mindset before you join. If that's wrong, then you sort of on a hiding to nothing, I guess. Just one other thing that I'd add to, I guess it's a similar point to what I was making earlier, is that one thing maybe we could have done better is like not to try and perfect things, like just to try and release things like, like an MVP.
But earlier.
Yeah, and then learn from our users rather than us trying to figure out what we think our users want, and spending too much time perfecting that, rather than get something out, test, and them telling us, okay, it's working, it's not working, and then iterate.
Fantastic. And so just the last question. Obviously, this show is for students and young professionals and young people to start their own businesses. If you had like one tip, each of you, if you had one tip that you would give to a young person now who wants to start a business, what is that one thing that you would tell them?
Don't be afraid to feel stupid.
Yeah, I would say don't try and do it alone. Because I think, two heads are better than one. You get more ideas, you sort of split the risk. When you, like, as an example, also, when you approach funders, if you're a single person starting up a business, they're very, they're less likely to give you funding. They want to see that there's more people involved. It's not just you carrying the burden of the company. So I think, yeah, if you maybe in the ideation stage, it's okay to do it alone. But once you've gone past a certain stage, you definitely need help. And I think it's for your own well-being and for the well-being of the business.
Fantastic. Thank you so much, gents. That was Thomas and Seb from Franc. Thank you everyone for listening. Until next time. Cheers.